Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market recap for the week ending October 27, 2017. So you all know, as far as the grain markets are concerned, very range bound, sharply unchanged, whatever word you want to use. For the week, corn finished the week up 4 cents, and for the month of October, we're currently down 8 cents. There seems to be a very strong gravitational pull towards 350. We have had roughly a 15-cent trading range in corn since Labor Day. I think it's 13 or 14-cent trading range for the month of October. Keep in mind, we're only 6 cents off the contract low, which currently is at 342.5 in the December corn. So it's going to be interesting to watch a very dull, rangeless market with not a lot of news and how it transpires over the next month to 6 weeks, and how that has any impact on basis, especially post-harvest. And also keep in mind the month of November typically is a down month in the corn market. As far as beans are concerned, we're down 3 cents on the week for beans. We're down up about 8 cents for the month on the soybeans. Looks like there's pretty good support if you look at a chart. Roughly in that 370 area, that could be key. If that doesn't hold, keep in mind beans are still in a different range than corn and wheat. There's like 70 cents off their contract lows. Obviously, the bean market has a little more of a demand structure to it going forward, and/or weather premium built in the market with the South American growing season around the corner. As far as wheat, for the week, wheat's up a penny. For the month of October, we're down 22 cents, and it's only 5 cents away from his contract low at 462 3/4. As far as commitment to traders report this week, funds are short about 175,000 corn. Funds are short about 84,000 wheat, which is a 6 or 7,000 contract increase. They're still long 50,000 contracts of soybeans, but have whittled that long down by 18,000 contracts. So in a nutshell, funds are still very short corn, very short wheat, and to some degree long on the soybeans. Funds on cattle, for what it's worth, those in the cattle trade added 8,000 contracts this week. They're 108,000 contracts long. Just a point of reference, the fund length in the cattle market as a percent of open interest is the biggest we've seen in a few years. So that is something to keep in mind going forward. Options on the grains, as we know, the prices are very light based on lack of volatility. One of the traders in Chicago told us today that the option volatility on corn now is under 13%, and he doesn't recall the last time we've been under 13%, but it's been many years. Open interest on corn, interestingly enough, this week, getting back to commitment to traders, was up 3%. Beans were down 2.5%, so we're seeing an increase in open interest on the corn. New shorts potentially coming into play while the end users are buying some needs. At the same point, I think we're seeing some of the length coming out of the soybeans by the funds. The dollar index has had a pretty good week. It's up, and we are at the highest levels in the dollar index since the middle of July. As well advertised, the stock market continues to be very strong and grinds higher almost on a daily basis, making new highs again today based on pretty strong earnings, especially in the tech sector. So the outside markets continue to be kind of languishing too, with a higher return on equities. Many feel that's going to keep the funds from looking for other alternatives as far as return on investment in the commodity trade. A few things to look at as far as producers on this grain market. Just because the market's quiet doesn't mean you have to sit and watch. Most are in the middle of harvest right now or in the tail end. The key thing we want to talk about is locking in carry, especially in the corn market. We haven't seen carries in the corn and bean market like this for several years. Locking in that carry and keeping ownership, looking for better basis opportunities if you have that ability with on-farm space. Talk to us about some ideas on that. There's also some option plays that are worth visiting with on the phone as far as some opportunities of protecting some risks there. And the last thing we mentioned is be careful in some cases with some of the created cash contracts that are out in the countryside. Just be aware of what you're doing and if they meet your needs. Cattle market this week, it's up over $6, and this is based off of a cattle on feed report a week ago that was very bearish. Cash market has been almost non-existent so far this week. Meats continue to go higher, so the cattle market and the hogs have had a pretty strong technical week this week. Again, funds are very long both those commodities right now. So in a nutshell, the grains, we continue to see harvest progress. If you're looking for ideas on how to protect some of your crop or some marketing ideas, feel free to give us a call. The key thing is to lock in this carry and know your local basis. If you have any questions on any of these markets, obviously give us a call at the office. Phone number is 800-373-2525. You can catch us on the web at biscommodities.com. And with that, everyone have a wonderful weekend.